Paul de Leeuw is the director of RGU's Energy Transition Institute, and I'm sure a very familiar face to many of you. Paul is going to share his thoughts on the 4Cs: COVID-19, commodity prices, climate emergency, and confidence, and what the likely implications might be for the energy sector. So I'll now hand over to Paul. Thank you.
Sarah, thank you for the kind words of introduction, and good morning to all friends and colleagues from all around the world. Either good morning, good afternoon, or good evening, wherever you are in the world. It's a real pleasure to speak to you here today. After many weeks of lockdown, I'm very conscious that many of us are rapidly reaching webinar and Zoom overload. So I'm planning to keep the session really simple, big picture, and as focused as possible. I am going to talk about COVID-19 and the implications for the energy sector, as well what we can learn from the whole COVID-19 situation as we shape the kind of new world around energy transition. A very international audience on the line today, so I really want to keep this kind of global and high level where possible. Next slide, please, Claire. Thank you. So what I want to do is take a little bit a step back and discuss what the impact of COVID-19 is on the sector. I'm going to show you some facts and figures to put the whole COVID-19 situation in a kind of wider context. I'm not going to talk about the here and now. I'm doing a far better job to manage that situation. But what I do plan to talk about is the kind of general context around the COVID-19 impact on the economy, but also zoom in, as Sarah mentioned, on the 4Cs: COVID, confidence, commodity prices, and climate change. And I really also want to talk about the collective actions required as we emerge from the current pandemic. Now, I only have about 30 minutes today, so I will not be able to get into a huge level of detail, but I'm very happy to take any questions at the end, or alternatively, you can follow up with me separately if we can't address today. You'll get my email address at the end of the session. Next slide, please. So, lots has happened in the last couple of months. I don't know about people on the call here, but 5 months ago, I have never heard of things like social distancing, furloughing, shielding, or social bubbles. And I think the world has changed beyond recognition. COVID-19 has literally affected every sector of society and the global economy. At this point in time, roughly half of the world population is either in full or partial lockdown. 19 out of 20 of the leading economies in the world, the G20 countries, are in partial or full lockdown. The only exception is South Korea, which managed the situation actually quite well. And by doing that, we kind of slow down almost 70% of the world's gross domestic product. So it's a huge impact on the whole society all around the world. But it is uniting the world against a common cause. Is something we have never seen in kind of recent history. So it's been a tough few months, and kind of lockdown has changed nations and our collective way of how we live. The pain has been felt everywhere, and there's a huge personal impact. I'm sure you felt it yourself in your lives, and your livelihoods, and our collective well-being. But also the business dynamics are changing. At this point in time, it's quite remarkable, but Netflix, the video streaming service, has a bigger market capitalization than ExxonMobil, one of the largest oil and gas producers in the world. And I wish I bought shares in Zoom earlier this year. They've gone up around 350% since the beginning of the year. So certainly a very rapidly changing world. And of course, many winners and also, few winners and of course, many losers. That's something to recognize. Next slide, please, Claire. So, talk a little bit around the impact the COVID had on industries. And I'm going to use the UK as a typical example. Again, the picture is not similar in other developed economies around the world. So if we look at what has happened, almost 25% of all the businesses in the country has either temporarily closed or has paused trading. Huge impact on business. For those who continue trading, almost 60% reported a fall in revenue. Again, direct impact on the situation with COVID. But economic activity is recovering as the lockdown restrictions are lifted. But the speed of how that happened, the patterns are highly uncertain. So it's probably kind of too early to figure out what happens, but it is estimated that in countries like the UK, almost 1/3 of all the jobs in the country are at some degree of risk. That includes permanent layoffs, it includes temporary furloughs and reductions in hours and pay. And the risks are actually very different. So if you're working in the water supply or the sewage and the waste industry, the impact actually hasn't been very, very material. But if you look at work in the accommodation, the retail, the food industry, it's been a massive impact. So the risks are really skewed in terms of certain groups and people, and particularly the people with the lowest incomes are the most vulnerable to job losses. Nearly 50% of all the jobs at risk currently are in the lower earning occupation areas. So other vulnerable groups are part-time workers and people, of course, working in sectors which are very much service related, which come actually to take place during the COVID situation. So overall, not a great picture. Next slide, please. So another, I think, an interesting example of how long it takes to recover from a situation like COVID. Of course, we have never, ever seen anything like this in the world. The closest was the financial crisis in 2008 and 2009, of course, for those who remember. So if we look at business confidence at the moment, measured by many organizations around the world, and the message is pretty consistent, very, very low. Probably at the level last seen during the financial crisis, again on the back of the Lehman Brothers issues. But there's also some better news happening. If we look at the Purchasing Manager Index, that's the index of what companies are thinking about buying and think economic activity going to do, it is actually going up quite quickly, and we are not far off to the pre-COVID world, and particularly the economies coming out of the kind of initial lockdown situation. But we know that a return from a downturn will take time. After 2008 recession, large companies recovered to the pre-crisis level, typically in around 4 years, while smaller businesses took an average of around 6 years. Now, at this stage, of course, hugely uncertain what is going to happen because nobody knows, and particularly if we see now a second wave hitting a number of the leading economies in the world. But a recent analysis done, is the picture you see in front of you by McKinsey and Oxford Economics, show that kind of all the different scenarios modeled, one which is a virus contained scenario, which means we have a vaccine, we have treatment, and we have good testing in place. It will probably be quicker to get there, but if we don't have it in place, we have a muted recovery, so we're actually going to have to live this COVID-19 for many years. It could take up to 5 years before we actually go back to the kind of pre-COVID gross domestic product we have in 2019. And different sectors will be hugely different exposed. So hospitality, recreation, education will probably face a bigger challenge than some of the kind of more easier to manage sectors like healthcare and professional services. Next slide, please, Claire. So, of course, I know there's a lot of oil and gas people on the line. So maybe a few things to say around the oil and gas situation. So again, no surprise to anybody on the call that the lockdown has materially impacted the oil markets. We saw an absolutely record demand reduction in April from around just close to 100 million barrels a day demand at the beginning of the year to around just over 70 million barrels a day in April. So almost 30% down in terms of demand. And of course, it sends shockwaves around the world. If you take about that volume out, think about it, that's the equivalent of basically taking the whole of the United States and Saudi Arabia offline combined. For a month. Incredible amount of kind of demand just disappeared. Overall, during 2020, demand is expected to fall by around 8%, 3 billion barrels. That will be the largest contraction in the market in absolute terms on record. That's the equivalent of losing the entire demand of India for a year, which is India is the third largest user of oil in the world. So quite incredible what played out in here. But then you need to look forward because as countries, companies, and other organizations come out of lockdown, it's kind of where are we going to be by the end of this year? And it's very interesting that there are different views on this one. Is it going to be a V-shaped recovery, so we kind of go down and we come out quite quickly? Is it an L-shape, so we come down and we stay there, or a W-shape? And it's quite interesting that the expectation is that from the International Energy Agency or the Energy Information Agency or even OPEC, we're going to be very close to where we were at the beginning of the year in terms of oil demand by the back end of this year. So a real restoration in demand happening during the remainder of the year. And we already see that happening. In China is almost back to what it was pre-COVID, and many other countries show a similar trend subject to what is playing out to the second wave kind of impact. But with lower oil demand, certainly in Q2 and in Q3, of course, we'll produce less. CO2 emissions are down quite significant, almost 8%. That's one of the biggest fall in CO2 emissions since the Second World War. So kind of a flavor, everything has a silver lining. So yes, demand is down, but also emissions are down quite considerably. Let me maybe give you a little bit more insight around why that is. Next slide, please, Claire. So I'll explain this picture a little bit more detail. So how is the question, how are we on track for this VLW, or even what I call a Nike swoosh shape recovery? So it comes back a little bit slower following the Nike swoosh shape. And this is really by tracking the demand in the leading economies and the leading sectors. And two pictures here. The first one on the left is the global consumption by country, who's in yellow highlights the G20 countries. And on the right is the global consumption by industrial sector. And the ones in green highlight the transport sector. So the G20 countries represent around 75% of the world's demand and almost 90% of the world's GDP. So it's a really good indicator what is actually happening in the world and what is happening in terms of demand. And as I said, early indications are that demand is already increasing. And we see actually the G20 countries potentially coming back quite rapidly. And that gives us an indication that the demand might well be coming back to close to the level of what we have seen, subject again of any second wave. But you can also look at individual sectors. And what we see happening is, and particularly in the transport sector, that actually a lot of the activity is coming back. Although people stopped traveling as much during the lockdown, we see actually quite a lot of that demand coming back. With the exception, of course, of aviation. Those who've seen kind of the planes parked on the airports, the kind of lack of flying taking place. But aviation represents 8% of the kind of world's demand. It's about 7 million barrels coming in. We're still flying, we still see domestic travel happening, we still see goods being shipped. But actually, it's quite interesting that over time, we will not see aviation coming back to the level it was pre-COVID. It will take a long time to come back up again. But that is probably the order of around 2 to 4 million barrels of reduced demand. So just to kind of, again, wanting towards these kind of leading countries, towards the leading sectors. If these coming back, we'll see demand absolutely coming back to close to the level it was earlier this year. Now, of course, the supply and demand will have an impact on oil prices. We have seen some absolute roller coaster on oil prices at the beginning of the year. For those who remember it, oil price, and I'll talk about the Brent oil price, which is the major marker for commodity price around the world, close to $70 in January, then dropped to below $18 a few months later, and now this morning up to around $45. And the $18 was the lowest level in almost 20 years, which is truly remarkable if you think about one of the largest traded commodities in the world. Now, there are 60 producing countries in the world. And of course, for these producing countries, that's a real issue if oil prices are low. But of course, if you're an importing country, low oil prices are really helpful. So it's a balance of what is in there. Many market observers and analysts expect the oil price to be range bound in the near term, somewhere in the 30 to 50% range for the remaining of the year. And for a very good reason. The floor is set by the cost of production, particularly shale oil in the US, and the amount of oil in storage, while there's also a ceiling at the same time, so it moves in that range. And the ceiling is set up by the ability to ramp up production and the reduced cost for new energy sources. So it's quite interesting when you look at the forward market, so the futures market of oil, which of course is traded many years ahead. It's kind of operating in this kind of range for the next couple of years, but again, subject to kind of market dynamics that can change fairly quickly. Next slide, please, Claire. So always kind of interesting to look at what is the kind of impact of that kind of oil price and the confidence for companies as they start operating in this market. So since the last oil price down cycle in 2014, 2015, the industry has done actually a remarkable job to position itself for a lower for longer world. So really position itself for a kind of $30, $40 world. And most economies and most oil producers have done a pretty good job. Cost efficiency improvements, technology, new ways of working, kind of indicate that most companies are robust at around $40 a barrel. Not necessarily the same for national oil companies, because although they might be so robust in the production, some of the nations require a higher oil price to balance the budgets. Saudi Arabia, for example, requires around $75, Iraq $60, Libya closer to $100 per barrel to kind of balance the books. But again, no surprise, similar to previous down cycles, companies are very much focused on preserving the cash and reducing discretionary spending. And what we now see happening on the back of the kind of COVID and kind of price world we had there in the last few months, we see typically companies cutting their corporate budgets somewhere between 20 and 50%. Again, depending on where you are, well, the impact is either higher or lower. But also we see the oil field services companies significantly reducing their budgets. And of course, because most people tend to work in the supply chain rather than the operating community, this has a very material impact on jobs. Now, the type of activity that tend to get cut is, of course, the non-critical activity, new project activity, drilling, exploration, and tend to be more CapEx than OpEx. So again, one thing we closely watch is as we see demand coming back, is this a kind of and we see in kind of, is this an L shape or a Nike swoosh shape recovery, and see again in the middle of lag time, see activity coming back into the world. So next slide, please, Claire. So of course, this is again what's happening in the world. We see COVID, we talk about confidence, we talked about what it means for the commodity, but it is of course critical that climate change has not gone away. The climate emergency and the energy transition is still there. And it is rightfully that we focus on the COVID-19 crisis because that's the kind of the urgent issue at hand, but we need to start thinking about longer term what we need to do around the whole sustainability and climate change agenda. And there are very clear parallels in my mind between COVID on one end, climate change and the climate emergency on the other. Both are global problems, require a global solution. They both feed a sense of unease. The fact that we talk about today give that flavor, sense of ease. They both are the result of our everyday behaviors, our own human behaviors. And they both require a response and a level of collaborations that governments often find hard to do. You know, we see it already on COVID. It's not where we collaborate as well, and the same on the climate change one. But the big learnings of from the crisis, how do we deliver on the net zero agenda? How are we going to work in the future? How are we going to travel? How are we going to live? How we pull together as different nations around the world around a common cause? Particularly how we recognize a different set of circumstances. We now have seen firsthand what it looks like to stop using hydrocarbons, to stop traveling, to stay at home, to change our life. And some things I know personally myself, I like. Some things I don't like. I like to have more flexibility and do things. So absolutely expectation that governments will put energy transition and whatever goes with it, including renewables, efficiency, batteries, hydrogen, carbon capture, at the heart of any economic recovery plan. And it's a key role for the leading economies around the world. And what the mean is it is that around 195 countries around the world, most have signed up the Paris Climate Change Agreement. But very few, and I'm literally talking, I think, a handful, have actually put net zero and climate change obligations into legislation. UK being one of them, by the way. So we absolutely need to start thinking about how we learn from the COVID situation to deal with the climate emergency. And this is not uniformly distributed. The top 10 countries represent the vast majority of the emissions, vast majority of the population, the vast majority of the GDP. So this is there's a real leadership role required for the leading countries around the world. And you can see the picture on the left who they are. Next one, please, Claire. Now, although the production and the consumption of hydrocarbons, of course, represent the vast majority of CO2 emissions, over almost 90%, the challenge, of course, is across the whole of society. The changes we all need to do to our life and livelihoods are going to be absolutely massive. If we look back over the last kind of 120 years, we've seen a massive increase in global population. If you look over since 1900, over the last 120 years, 5 times the increase in population, but a 20-fold increase in emissions. So huge amount of new emissions coming in. CO2 levels in the atmosphere currently are well over 400 parts per million and rising steadily. And it's quite interesting, anybody who was born in the last 4 years will have never experienced a world below 400 parts per million. So they will always have lived in the world of increasing temperatures and increasing climate change, which is a kind of a frightening prospect if you think about it. So going forward, there aren't actually any easy answers. There's no kind of magic anybody has, because we still see the global population growing. We still see global domestic product kind of doubling. We still see primary energy demand growing as well. So it is literally every sector, every business, every service, every individual is going to be affected and will need to contribute. And you can see that in the slide here, that it is not just the energy sector, it is all sectors who need to play their part. Next one, please, Claire. So there's a real opportunity as we come out of COVID to build back better and build back greener. And I'm going to use a UK case study. But actually, when you look at this picture, maybe the starting point for each country in the world is different, but the end point is the same. We all need to get to a world where we have a sustainable net zero agenda. Net zero means, we might admit that we offset them at the same time, so nobody contributes to CO2 in the world. And that's a real shift, particularly for the extractive industries, from maximizing the recovery of hydrocarbons to maximizing the energy potential in a country. So it's really important that we kind of shift and make a transformational shift for each country. Now, what does it mean for the UK? And I'll give you an example because it's very similar for other countries. A very simple message: we are going to collectively have to use less oil and gas. And we will shift our economy far more to a hydrogen economy, with carbon capture and storage and wind energy to support it. Wind will be particularly focused to sort out the electricity demands, and so particularly around power, but in the future also around heating. Hydrogen will become particularly important for the heating, both green hydrogen, which is kind of made by electrolysis, so basically you split water into hydrogen or by steam reforming, taking natural gas, put it into hydrogen, and then store the CO2. So we see hydrogen, wind, and carbon capture and storage absolutely going together as a replacement of kind of moving away from a fossil industry. Now, it doesn't say we're not going to need oil and gas in the future. We're probably going to need quite a lot of oil and gas in the future, but how are we going to use it? How are we going to produce it? It's going to be very different. And in the future, we will absolutely see that we're going to need all the skill built up over decades and decades around the world in oil and gas to be kind of applied to hydrogen, carbon capture, storage, and wind energy. So the future workforce will be an energy workforce far more than it is currently an oil and gas workforce. So a tremendous opportunity in terms of new jobs, new opportunities. And again, what is playing out is happening around the world. So the what picture, what needs to be done, is very clear. The tricky part is not the what. The tricky part is the how and the when, because that's different in each country, what you end up for. Now, the business models for hydrogen and CCUS, so carbon capture and storage, don't currently work anywhere around the world. So it will initial government support, and it might be challenging in the current economic environment to give support to develop new business models. But the world is going to have to spend money on making this happen, and there's a lot of money to be spent. So it's a great opportunity for the sector, for the oil and gas sector, and the supply chain companies to leverage the skills and to do that. If we get it right, we create jobs around the world. It makes all our economies more competitive, and will steer us all to a far more resilient and cleaner energy future. Next one, please. So collective action is absolutely critical. We are conscious that the world has fundamentally changed in recent months. And again, for many of us around the world, it is still changing on a daily basis. How are we going to work, travel, interact, live, maybe reshape in the coming years? This is not about oil and gas versus renewables, or old versus new, or blue versus green. It's about a just, fair, affordable, and sustainable transition to a lower carbon world, a world we actually all want. Now, this will require some real industry-leading collaborative behaviors and a next normal in terms of how we work together to deliver this, what I think is an incredibly exciting agenda. And there's room for all and need for all. So there's no one country is better than the others. It's about how countries work together. How do we leverage that skill? So something is done brilliantly in one country, let's not reinvent the wheel somewhere else. Now, there's a big conference which was supposed to happen this year, which is the COP26, the Conference of Parties Conference by the United Nations, to talk about climate change, which is now going to happen next year here in the United Kingdom, and will be an absolutely key meeting. And the reason why this is a key meeting, after the Paris Climate Change Agreements were signed 5 years ago, this is the meeting where the countries need to come is there specific country plans and legally binding commitments to make sure that agreements are in place to limit global warming by 2050 or earlier. So this is the key conference post-Paris to make some of these things come to life. Failure to do so, of course, will jeopardize our collective ability to manage climate change. Of course, that's a big deal. So again, watch this space as we work towards the big COP26 conference next year. So conscious of time, Claire, if I can maybe go to my last slide. That's all right. Thank you. That's in summary. So I'm conscious you'll be listening to me for a long time. I'm sure you have some fantastic questions. So let me summarize some of my key points. Although COVID-19 has an unprecedented impact on our way of living, and again, it will be different from wherever we are around the world. As we prepare for this next normal, we know that things won't get back until we have a vaccine, a treatment, or a kind of good way of actually testing people. Be it COVID-19, but by the time we get there, it might well be COVID-20 or COVID-21, because of course this will change over time. None of us yet know what this next normal is going to look like and if we like it or not, but we probably all have a role to shape this new future. What we do know is that we can use an opportunity to accelerate the energy transition. We probably never have a more attentive audience around the world than we have now. And as such, I very much look forward to work with you, your colleagues, and all our friends we have around the world to use this as a COVID-19 wake-up call, as a real catalyst for, as a breakthrough on the net zero agenda. So that's my kind of key points. Thank you so much for listening, and I look forward to questions. And if either today or if we can't do it, you've got my email address in the bottom of this slide. I'm very happy to follow up in any other way I can later on as well. So with that, Sarah, can I hand back to you, please?
Thank you very much, Paul. That was a really interesting presentation, and I hope all of the participants found it as helpful as I did. We do have quite a number of questions that have come in.
Goodness.
But please, if you do have other questions that you would like to submit, please do still submit them. And if we don't get through all of them today, we can have a look at them afterwards and send you a note with answers later. So first question, Paul, from Sybil is, how could we identify opportunities for SMEs are currently part of oil and gas supply chains so that they may shift to cleaner energy, commercial productive alternatives, such as electricity or renewables? So how can we encourage SMEs to shift?
Yeah, I think it's a great question. And I think the first thing is, of course, we need to get the demand to shift, and that's already shifting. For those who followed the two recent announcements, and particularly the one I think from BP this week was a real eye-opener. So BP is, of course, shifting from what they are, an international oil company, an IOC, to what they now call themselves an international energy company. And they're kind of saying, we're going to ramp up our spend in renewables from 500 million a year to 5 billion a year. Over the next decade, and they're going to reduce oil and gas production by 40% by natural decline and reshifting the portfolio. Now, I think that is going to open up an incredible opportunity for the supply chain, because as you saw in my little arrow chart, how much more hydrogen we need, how much more carbon capture and storage we need, how much more wind we're going to need. The amount of money is going to be spent on new activities is going to be incredible. And I think the people who are going to benefit is innovative, fast-moving, agile companies, and the SME community has a great role to play. So I think it's both the business model from an SME, the responsiveness to the kind of demand from the operators, which I think is shifting. But I also think there's an incredible role for technology that's going to take place, because again, currently the business models are not yet viable. It will need innovation, it will need technology. So any SME who has that kind of agility, the business model, the technology is extraordinarily well placed to be successful in this world.
Perfect, thank you. And a question from Brian, do you think that the current spending cuts by oil and gas producers will lead to a supply or demand imbalance in years to come, or will the decrease be offset by alternative energy sources?
I think it's going to be a bit of a kind of volatile world. So I think it's a great question. So I think it is, so there's a lag time in everything. So of course, at the moment, there's a huge amount of capacity sitting there. It's either capacity because we closed wells in, we're not using, or it's capacity in countries saying is we're going to take some cuts. OPEC plus are still cutting, they're still cutting 7.7 million barrels a day. And there's a huge amount still sitting in storage. So, are we going to have an issue in the short term? No, because actually there's a lot of capacity out there. But there will be an element is if we start saying is actually we stop investing in oil and gas because either we can't get the access to finance because banks and other financial institutions don't want to invest. And of course you get an imbalance because we decline 3 to 5% a year. We need to replace that every year to kind of stand still. So we will absolutely need investment in oil and gas. It is not is an energy transition. It's not a switch over. So we need to make sure we keep on investing. But the clear people and countries are going to make this commitment as part of COP26 to saying this is what we're going to do by legislation. This is the targets we have. The clearer picture we're going to see on how the energy transition is going to work and what is it we need to do in that kind of transition phase really. So I think back to the question, do we see an issue? Yeah, there could be an imbalance, but it depends. We need to have a long-term impact on not investing, and it depends on the speed of new renewables going forward. Now, remember, the first focus of renewables is in wind, and it's wind aimed at the kind of power market. Heating, we haven't, and transport, we haven't really addressed yet.
Mm-hmm. And I guess from a question from myself on the back of that, what do you think needs to be put in place to really push forward with some of the activity in regards to energy transition? We're hearing about it all the time in the press and from companies, but there still seems to be a bit of lack of activity.
Yeah, it's quite a tricky one because each country is different, but there's probably, I can see there's probably 3 or 4 key things, I think, what sits in here. And I'll actually come back to Brian's question as well. You need to get the policy and regulation right. You know, you need to say, okay, if you want to invest in hydrogen or you want to invest in offshore wind, you have to make sure you can actually have the licenses, you can actually build the facilities, you can produce the facilities, and you can use them. So the policy regulations be right. It needs to have a viable business model. So at the moment, what we do know is that hydrogen and carbon capture and storage anywhere around the world isn't yet viable as a business model. So it might need a support framework similar to what offshore wind was, and it didn't make any economic sense, but now it competes on its own merit. That could be carbon tax or carbon pricing mechanism. We also, probably the third one, Sarah, I would say probably some financial support to stimulate activities. So there might be government might say in the building back better or building back greener. They might put some money, strategic money in little pockets in projects. That could be anywhere in the world, right? Why you do that stuff. And the last one is probably to do with us as consumers. You know, if there is demand for it, it will happen. You know, so we want to say is we want to buy green electricity, we want electric cars, we want to heat our houses differently, we want sustainable fashion. You know, we want a different life. Then demand is there, supply will follow. So I think that combination is probably where I see the kind of the focus if we want to get it right.
Okay. Perfect, thank you. So a question from Abdul. Can you talk a bit more about business models for carbon capture utilisation potential in the UK for sectors that are hard to decarbonise, such as the transport sector and small point emissions like distilleries?
Yeah, so the I mean, again, it's quite interesting. I do, by the way, think the transport sector is actually relatively easier to decarbonize than others. And again, there's certain elements you can do. You can say, yes, we can have changed the fleet. So I use the UK as an example. And my latest count, I think there's just short of 40 million vehicles on the roads in the UK, and each country will have their own number. Of course, there are pretty well, most of them are now petrol, diesel, whatever other combination, and you're going to have to take these off the road to replace it. But you can make them electric, you can make them hydrogen fuel, or you can do other combinations. Initially, you will do the easy ones, which is the kind of the cars before you do the trucks. But there's a lot of work going on to actually decarbonize other parts of the transport sector. That's a big focus around, can we use hydrogen or ammonia fueled vessels? So you start thinking about the marine sector. Airlines might be different, but you might have a biofuel kind of mechanism. So there's elements around where you can do it. Where it is trickier is to say is how do you decarbonize activities where it's a high intensity user of energy. But if you use even a distillery, rather than using pure gas, imagine you have a world where you use either ground heat or you use hydrogen as your fuel, which is actually becoming a neutral input, carbon neutral input before you even have the output. So I think that's the creativity of all these. I think about what are the options here? Can we make the business models work?
Okay, thank you. And kind of, you touched on biofuels in the answer to that question. So a question specifically about biofuels from Ramon. What is your opinion about biofuels, and will this be a good way to satisfy or substitute petrochemicals and petrol?
Yeah, so there's a mixed feeling about biofuels, and particularly how you generate them. So some people say is if you grow biofuels, it starts competing with growing food and the use of land, and that might be not the smartest way. So I think we need to start thinking about creatively, how do we create biofuels, and is it something we can do on land? We can do kind of using the oceans for, so there's an element around, there's a mix in there, but I think there are certain sectors where it is just a little bit more difficult to kind of decarbonize at this point in time, and I use particularly the aviation sector as an example. So we might need to recognize that we might need to do certain type of technical solutions or hybrid solutions for the sectors which is more difficult. And I think that's, again, where creativity comes in to figure out is, give people a big problem, they come with big solutions.
Yeah. Okay, I've got quite a long question here from Sergio from Mexico. And it's specifically around the Latin American situation. So considering our economies are not as strong as developed countries, and we are more dependent on cheaper energies and more pollutants, how fast do you consider the increase in greener and clean energies could be in the Mexican region in comparison with the UK?
I mean, so I think it's a great question, a question we get quite a lot. And maybe I can see it in different ways, because again, there's an element where certain countries have put it into legislation. I'll give you an example. The UK has done it, as other countries in Europe have done it. Where it has to happen, and therefore technologies might be developed. What we were maybe suggesting is let these countries develop technologies, but then whoever becomes then a very fast follower. Yeah, so basically we might find technologies to reduce emissions from platforms. We might have other technologies coming in. Rather than reinvent the wheel, other countries might say, you know what, actually it works, we'll just take it, and we're going to be the fastest follower. And maybe that's the biggest thing we can do, to saying is actually every country operates at its own speed. We all need to get to net zero. The benefit might well be some lead, others follow. And again, we might find countries like Mexico will lead on completely different elements, but the rest of the world will follow on. So it is about finding that balance in here. But I don't think it's a good outcome is it is applied somewhere in one country, it works brilliantly, and nobody uses it. I think that is the kind of world we need to move on from. If it works, we should not compete on climate change. That should be something we should collaborate on, like we collaborate on safety. Environment, safety, climate change is not an area of competition for us.
Critical areas. Okay, thank you. Question from Danella. If you were advising your children as to critical skills for a future in energy, what would you suggest, and how might they learn?
So I have two sons, and both my wife and I work in the energy industry, and both my sons do not. So I'm not sure I'm the best person to take advice from anymore. But I do think there's something quite interesting. I spent all my life in the energy business, and it is an extraordinarily exciting business. I mean, travel all around the world, work with different countries and different elements. And it's just amazing how you can shape industries, you can shape countries, and you can shape what is happening here. And we are on the biggest transformation in energy, I think, we have seen on this globe, in terms of how we go from what is a fossil-based kind of energy system to a kind of renewables, low-carbon energy system. So actually, this is the equivalent of putting people on Mars, in terms of the kind of challenge we have. So I think we need the whole range of people. We need the engineers, the lawyers, the HR professionals, everybody needs to be there to saying is how can we make it work. And it is not just an economic challenge, it's a societal challenge. We need the architects to build the houses of the future. We need the fashion designers to build not move away from fast fashion and start building kind of the things which are sustainable. I think it's an incredibly exciting world. Wherever I go and I speak to the next generation, we get past the oil is dirty conversation. And I tell this, kind of like, maybe there's something in there. And remember, all our iPads, iPhones, or whatever other brand is applicable are made from hydrocarbons. So we still need the product as well to do what we want to do in our lives.
No, and I know we've discussed this quite a bit. I think it's more around the story we tell about the industry, and there's quite a bit of work going into that at the moment. And very important. Okay, question from Craig. Does the industrial and population boom across Africa, Southeast Asia and South America, which is causing destruction of natural green spaces and possibly unsustainable local extraction, threaten the progress of the green revolution?
So the population, there's probably three things factoring out. I think Craig absolutely got it right. There's almost three things factoring out, and we need to get this right. And I use this as what I call the equation for climate change. It's always interesting, So there are certain things we can't do much about. We know that the population is increasing across the world. Some countries like Spain and Korea and Japan are going down, Russia goes down, kind of over time we'll see kind of a balance. But yes, overall the population is increasing. That's kind of hard to do this. The other thing we see happening at the same time is that the energy use per person is kind of going up as people want to have the same lifestyle as we will have in developed countries. So if you're sitting in wherever it is and you look at developed countries on kind of, I want a lifestyle. So both the number of people as well as the kind of energy consumption per person is increasing. So the only way to get to net zero, if you don't touch the first two, is actually make the energy use per unit of activity to zero. Yeah, so therefore you can say, okay, you can use more energy, there's more people, but you don't emit anything. So therefore, where zero carbon cars come in, and zero environmental impact housing comes in, zero environmental impact fashion comes in. That's the only big lever we have left. Of course, if you reduce the population, reduce the energy take by the individual, you can do that, but actually that's quite hard to do. So the only big lever for governments around the world is to reduce the emissions per unit of activity, and that's what everybody's currently focused on. And I think so. Back to the question, okay, you're asking is around if we live with that increase in use and increase in population, that's the big lever we need to pull, and that's where all the focus needs to go on.
Mm-hmm. Perfect. And kind of related to that question, there's a question from Mario, Paul, saying, do you think that economic and social issues, particularly arising from COVID-19, will have a strong effect in the types of energies that people and economies and politicians, along with their policies, will use in the future?
Yeah, I think, COVID is either a help or a hindrance, because what is happening, of course, as I mentioned, it's going to take many, many years to get back to the pre-GDP levels we have seen in 2019. It could be anywhere between 4 and 6 years because we get back to where we were. So you're kind of saying it's a lost period of time. But I think the main thing is if governments can use and saying is, okay, this is now, we're going to use that time wisely to do something what is different. So don't make it a carbon economy, but actually start building, I call it building a better, but it really is just saying is actually we're now going to invest in new jobs, in new activities, what specifically focus on there. So actually it becomes part of the social fabric of a country. Yeah, and again, any country can do that. The saying is actually investment is still happening, but that's what we're going to focus on. So I think it is going to be quite an important one, and we are in a transition window, and countries will move at different speeds. So there are countries which are absolutely in Scandinavia, Norway, Sweden, Denmark, Netherlands, United Kingdom. It is focused on one element, others might be in a different part of that spectrum, but over time we all need to get there, because that's the commitments that people are going to sign up to when they get to the next COP26 meeting.
Thank you. I'll just do a last couple of questions because I'm conscious of the time. What do you think can be this is a question from Akil, what do you think can be the role of digitalisation and circular strategies in oil and gas, and what do you think could be the possible solutions?
So I think, as I say, it's a technology question. I think the digital technologies are equally important. I think there's a huge amount of scope to actually use the clever stuff we're doing in other industries. We did a piece of work not long ago. I looked at what digitalization has done to certain industries and how do you use it in the energy industry. So if you look about some industries, particularly like the banking industry or the retail industry, or really kind of marginal industries, they've done incredible jobs in digitalization, driven by margin and survival. If you don't do it, you need a smartest website, and you see what Amazon can do, what Google can do, incredible stuff. But what we now need to do is other industries are behind, so we need to take that digital capability and put it into the oil and gas industry and the energy industry. And it completely changes the way we operate our assets. The classic approach that I can see a world where we separate expertise from execution. So the expertise sit onshore and the execution might happen offshore, but actually you don't need to have the people in the same place. You use the digital connection between it. I see a world where using digital technology where you don't need people necessarily have all the skills, but everything is on the YouTube equivalent. So you take your iPad offshore or to a site, and actually all the information is at your fingertips. And if you don't know it, you press the button for a chat function to speak to an expert any in the world. So I think the question around is absolutely brilliant, because I actually think, back to the question, what can SMEs do? What's the energy transition look like? I think skills and the whole technology and digitalization is right in the middle of that.
And just back to on the question else also about circular economy. Is there any further thoughts on that?
Yeah, I mean, again, as part of the kind of the climate emergency, net zero is the sustainability agenda. You know, we kind of have to, if we continue to extract resources at the rate we have, we just run out. So that model doesn't work. So we need to have a sustainable economy, which is far more circular, far more sensible, far more used on that one. So I do think, you know, kind of combining that and saying is how do I use my resource, how do I recycle them, how do I use it, and how do I find a digital solution to monitor it is absolutely in that conversation.
Okay, perfect. And I think I'll just do one last question to end on, and those that we haven't managed to answer yet, we'll make sure that we come back to you later. So thank you again for all your questions. So a last one for you, Paul, which I thought was appropriate to end on. Was it seems that we have a big opportunity, but do you believe it's really feasible, taking into consideration huge individual company interests?
So, I give two answers. One, absolutely, I think it is feasible. Absolutely, you know, I mean, I would be on the call today. I would do my job. I would come out of bed in the morning. I don't believe it is. I think it is an absolutely doable challenge. But you know, it's like you need to do it bite size. You know, you can't do everything in one go. You need little bites of size and do it. But not only do I think it's absolutely possible, I think it is an absolutely necessity. We have no choice if we want to have a lifestyle and a world which we are kind of grown to have, and we kind of have to look after it in a way we haven't done before. You know, we need to start thinking about what's the responsibility we need to take and for this world. It was a very interesting saying which I picked up from one of the state governors. You know, we are the first generation to kind of see the impact of climate change. We also are the last generation to be able to do something about it. And that for me really struck a chord that is not an opportunity, it's not a choice, it's a must-do thing collectively for all of us.
Perfect. Thank you so much, Paul, for your excellent presentation and for answering all those questions at the end as well. And thank you also to our participants for joining us today. I hope that you found that useful and interesting and inspiring. For the questions that we haven't answered, as I said, we will have a look at these and get back to you with some responses to them. The recording of today's webinar will be available on the RGU Knowledge Bites for Business webpage next week. And for those of you who have not already signed up, our next webinar is taking place next Thursday and is focused on keeping yourself safe online, which is something that's very topical and certainly something that I'm looking forward to learn a lot more about. And again, more information can be found on the RGU Knowledge Bites for Business. So thank you all once again, and I hope you all enjoy the rest of your